All right, let's get straight to it. There was a major energy shock in Asia overnight, and it triggered a massive capital rotation out of semiconductors. Now, what this does is give us a 12-hour leading indicator, a heads up that rising energy costs are about to put some serious pressure on U.S. tech valuations right at the open. The vector is confirmed. See this number? This is the number that just defined the entire session. For now, just burn it into your brain. This single print is what kicked off a huge cascade across the entire global supply chain. Okay, now look at this, because this is where it gets really interesting. You've got this divergence. The main index, the KOSPI, it's down, but the secondary index, the KOSPI, rallied over 1%. Now that is not just random market noise. No way. That is the clear signature of a strategic, hidden rotation by the big money. So let's follow the breadcrumbs.
Okay, Section 1, the energy shockwave. We're going to pinpoint the exact catalyst that just fractured this market.
You remember that number from the start? Plus 6.57%? Well, that was the overnight spike in WTI crude oil. This is our energy shock. It hit nearly $93 a barrel, and in an instant, it repriced the input costs for every single major manufacturer in Asia. And here's the immediate domino effect. That energy spike, it pumped up inflation expectations, which in turn sent the U.S. 10-year Treasury yield climbing to 4.227%. Now you know what that means. For all those high-growth tech stocks that are valued on their future earnings, higher yields just crush the present value of those profits. The threat is now crystal clear.
And that pressure, it forced what I call a migration of capital. The money had to get out, it had to flee the assets that were most vulnerable to this new cost environment. And here is the proof. A staggering 1.78 trillion Korean won, that's over $1 billion US, yanked out by foreign funds from the tech sector. This wasn't just trimming a position, this was a full-blown evacuation.
So why this sector specifically? Simple. Making those high-bandwidth memory chips, the kind Samsung and SK Hynix build for the whole AI boom, is incredibly energy-intensive. It's a power hog. With oil at $93, their profit margins are immediately at risk. You gotta understand, smart money doesn't wait around for the quarterly earnings report. It reacts the second the input cost shock hits. So where'd all that cash go? It ran for cover. It found a safe harbor. It rotated into things like energy-independent infrastructure, renewables. These are the kinds of assets that aren't just immune to an oil shock, they actually benefit from it, because all of a sudden the alternatives look way more attractive. All right, Section 3, the canary signal. See, this capital flow wasn't just random panic selling. It was a calculated, predictive signal. It's the canary in the coal mine for U.S. tech. Here's the bottom line. When you strip away all the noise, the message coming from the global hardware supply chain is clear, it's direct, and it is unequivocally bearish for tech. But, and this is the critical tension point, right now, U.S. tech futures are holding up. They're resilient. They have not priced in this signal from Asia. Not yet. And that creates a conflict, a logic gap that has to resolve itself when the U.S. market opens. And that gap, that's our edge. We can now take this 12-hour lead we got from the Asian close and translate it into a clear, actionable trigger for the U.S. session. The trigger event is the jobless claims data, dropping at 8:30 a.m. Eastern. Now, here's the playbook. A high number, that could cool off inflation fears and actually give tech a boost. But a low number, that confirms the inflation threat we're seeing from our Asian signal. The key levels to watch for each outcome are right there. You've got 25,000 on the upside, and that critical 24,705 support on the downside. All right, analysis is complete. We are now engaging the execution protocol. Say it with me. Do not trade the headline. Trade the supply chain. These are your NQ execution levels. Your entry, monitor for a break above 25,000 resistance. Your exit, defend the critical 24,705 support. And your invalidation, all long positions are canceled if the 10-year yield breaks above 4.25%. That is the hard stop, no exceptions. Final checklist. Watch pre-market volume on NQ. Confirm the signal only if the volume aligns with the move. Invalidate if the price action contradicts the data. Await the 8:30 Eastern release. Do not act before the trigger. The signal from the Asia close provides the vector before New York even wakes up. If you want this edge, you know what to do. Subscribe and be ready.